Hello there. This is again another teaching on double entry for beginners. This is one of the few series that we have delivered just to give you an insight around double entry. What we want to do with this one is to show the classification of costs, income, expense, assets, liabilities, and the rest of it. So we have there your double entry principle, which says to us for every debit entry there must be a corresponding credit entry, and we have the acronym that we use: DED-CLIC. Debit, expenses, assets, and drawings. You credit liabilities, income, and capital. So of course you need to know what is income before you even start talking about, okay, am I going to credit it or debit it in line with DED-CLIC? Or better still, you need to know what is an expense before you start knowing whether it's on the debt or it's on the click, and whether I'm going to debit it or I'm going to credit it, or whether it's increasing or if it is decreasing. So we want to look at sets of transactions that can be classified into different items. You will be expected, or I will say to you personally, that you want to look at this and look at it again and then look at it again. What will you call drawings? What will you call an asset? What will you call an expense? And we've just put in here a maybe basic simple flowchart that gives you an idea of different types of expenses. Please do bear in mind this list is not exhaustive, but we've put in as much as can reasonably be put in. You have stationery, miscellaneous expenses, premises expenses, motor insurance, purchases, wages, sales returns, office expenses, rent, rates, bank charges, motor expenses, depreciation, bad debt, utilities, advertising. Those are just so many different types of expenses. You think about it, you name it, it could be an expense. But you need to know that there's a difference between expense and asset. Asset is what you own. Expenses are running costs that you will incur again and again in the course of your day-to-day business operation. You have assets, motor vehicles, office equipment, petty cash, bank, sales ledger, control account, debtors, control account, trade receivables, VAT owing from HMRC, prepayment, inventory. All of those are all assets to you. Then you have drawings, which is drawings on its own. Then onto the credit side, you then start talking about your liabilities. You just want to know what are the different types of liabilities, what are the different types of income or possible income that you could have. Then of course capital stands on its own. What we want to do is just very quickly and very briefly and simply to look at an exercise and try to identify what will I classify this as. So we have here the account names: VAT owed to HMRC. You are owing HMRC. That is, I hope you got it right, a liability. Petty cash, what you have, money that you have in your hands, it's an asset. Bank interest received, that is an income in your hands. Utilities, that is a type of expense. Your gas bill, your light bill, and the rest of it, expense. Then we have bank loans. That is a liability you owe the bank. Sales ledger control account, that is an asset. Purchases. Capital is capital. Equipment, that is part of what the company owns. Premises expenses. Premises expenses, it gives its name away. Purchase ledger control, it's a liability. Another name for it is creditors or your trade payables. Wages, you have to pay wages again and again. That is an expense. Bank is what you own. Purchase returns is classed as income. When you purchase, it's an expense. If you return the item, it is classed as income. Sales is income. Sales returns, then becomes an expense to you. It's a cost that you will incur if a customer returns an item. So it's classed as an expense. The rest of it is practice ongoing, whether you want to go with the classification and practice ongoing, or you want to go with the flowchart we had previously and try to identify and learn, what do I debit, what do I credit. All of it is all learning, learning, learning. And I hope this has been useful. The rest of it is practice ongoing. Please feel free to follow us, like us, and subscribe to this video if you've found it useful, and follow us on all the social media platforms. We try to make useful videos and interesting videos and content that is relevant in accounts and a little out of accounts as well. Okay then, continue studying and continue learning. Adios.